This is News Talk 980 CKNW.
We finally have a date for the federal budget, Linda, but the question is, how much of it is Trump-driven? Great question.
Very good question. And if you're watching the Federal Reserve's next move on interest rates, the markets have a bit of a clue for how that might affect Canada. With more on this, let's bring in Michael Campbell, the host of Canada's #1 rated financial show, Money Talks.
Mike, let's start with that federal budget. We found out yesterday we're going to get it delivered to us March 22nd. Any thoughts on what's going to be in it or what's not going to be in it? Looks like they're short of cash this year.
Well, they certainly are, by the way, because, of course, the deficit, Mr. Morneau the finance minister, gave a fall update. I think it was in November, and he said that this year's fiscal update would be $25.1 billion in deficit. Next year's, 2017-18, they're projecting $27.8 billion. So, yeah, they're certainly running into the deficit problem that way. But, I mean, they've been talking about, the one thing I've got to smile about is how, you know, politicians, any party, doesn't matter which, but they get sort of on this mantra, they get the spin going. So we know it's going to be talking a lot about the middle class, and there's going to be a lot of that. But we've also had clear signs that they're going to spend money on infrastructure. I don't think that'll be a surprise. And the finance minister said the budget's going to focus on jobs, ensuring Canadians develop, the right skills for a changing economy. And, of course, their favorite new buzzword is innovation. Although I must say the government hasn't defined yet what it is. So, yeah, those are going to be the general direction that we're certainly going to hear about.
And we know there's going to probably be a deficit, and we're kind of used to that.
Yeah, absolutely. As you say, this is one of the criticisms that they have to endure because during the election, Prime Minister Trudeau said $10 billion maximum per year. Clearly, those numbers aren't in play any longer. The finance department itself is sort of projecting deficits right through 2050. And I think the criticism of the government has been that they're not showing any plan at this point to balance that budget. So I think that's pretty straightforward, that they're going to hear a lot about that in this budget.
Mm-hmm. I guess what we need to look out for as well is how much, these changes proposed by Trump are going to affect our budget. Do you think they've taken that into account?
Yeah, I think they have to, but there is a few things that are going to hold them back on that, and that is one is that we've just been told that the NAFTA talks themselves aren't even going to start until later this year. And after all those wrangling and the negotiations, et cetera, if they did make some major changes, it would take yet another year to go through. So there's not going to much to be due on the trade front. It's going to sort of overhang a lot of stuff, so I don't know how they can react to that. I think the number one thing they're going to be looking at is competitive tax changes are the main concern. I mean, clearly Mr. Trump has said there's a brand new tax agenda coming for the U.S. Remains to be seen when that's going to be delivered, because I think that's complicated stuff, by the way. But I'll give you an example. If the U.S. lowers their corporate and individual tax rate, it could have a big impact on capital flow, like where money is going. You remember a few years ago, we had Burger King taking over Tim Hortons, and then they moved their head office to Canada, and tax reasons certainly played a part. They've had many other corporations leave the U.S., go to Ireland and other jurisdictions for tax reasons. Well, Mr. Trump wants to reverse that. And so if he does, that does have implications for Canada. Especially, I think it should limit any thought we have about raising taxes on businesses or higher income individuals, because, again, we had a brain drain in the late 90s in this country. So that would also be a concern. So that's going to be the place where we're going to have to see if the federal government is anticipating something there. I mean, nothing stops them from making a change after those new taxes come in, but I think that's got to be anticipated there. I mean, let me just be clear. The number one thing, when you get, every politician talks about jobs. Every politician talks about spurring on economic growth. Doesn't matter what party they're in. I still smile at that, by the way, because if it was that easy, why aren't different governments doing it throughout the Western world? But the bottom line is this. It's a straightforward formula. You've got to attract capital. You need businesses to invest, and they hire people, and there you go. So what the government can really do is create a tax and regulatory environment that's attractive. That's exactly what Mr. Trump is doing down in the States. He wants to create a regulatory environment that's more attractive. That's why he says for every new regulation, they've got to eliminate 2. He signed that executive order in January. That's why he's talking big time about changes to taxes. So that's the game. The game, it doesn't matter if you like economics or don't like economics. The bottom line is the game is to attract capital. That's how you grow an economy. That's how you create jobs.
All right, before we let you go, let's talk about the U.S. interest rates. What's going on there?
Well, it's interesting. I heard, in the intro, you're absolutely right. The market is giving it, we talked last week where a week ago Friday, the market had a 40% chance of raising rates, in the meeting coming up in March. Then it moved to 80% on the following Monday. Now it's 100%. So the market's saying that March interest rate increase is up and on. But, how it impacts us is straightforward. Look at the loonie. The loonie's down, 2 cents since the kind of talk started to get more sure over the last week. So right away, we're going to feel it. It's going to, obviously it's going to cost us when we're traveling. I mean, keep in mind, we've got a lot of people getting ready to go to the States over spring break. Presto, they're just paying a little bit more for that. And, the other pressure, by the way, is we're seeing a drop in oil prices right now. So that combination has helped push the loonie down. But I think the number one thing is if the states are raising their interest rates, that looks awfully attractive to capital moving around the world, certainly more attractive than what's going on in Europe still with some of their negative rates. So that's going to be the key thing. We'll feel it. Shortest term, we'll feel it in the loonie.
All right. I don't want to let you gloss over the fact that the loonie could go down, but, I think most consumers are going to want to know, if they are away for spring break, how low could it go?
Yeah, well, the easiest thing is to say, let's just look at the last low. When it had its last bout about a year ago, we hit 68 cents. We're now at about 74 and change. But we hit 68 cents. But I think the biggest recommendation, the number one recommendation we've been making on Money Talks since early 2012, right through it, and ever since, is that the U.S. dollar is going to be the beneficiary of money coming out of Europe as that mess continues to unravel. It's going to get money out of the emerging markets as people look for safety, and Asia. So I don't think, it's not really going to have to do with the Canadian dollar as much as the strength of the U.S. dollar. I think the Canadian dollar will do fine against the euro, against the yen, et cetera, but it will not do fine against the U.S. dollar. So I won't be surprised if at some point over the next few years, and we'll get a chance to talk about it, that 68 cents is in jeopardy, and we go back to 63 cents that we had, in the early 2000s.
Oh, boy. All right. Thanks so much, Michael Campbell. We'll talk to you next week.
Hey, that's good news, Linda, if you own U.S. dollars. Okay. Thanks.
Yeah. Okay. I own about 50.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKNW.